Hello, everyone, and welcome to this Australian 2023 end of financial year webinar. It's Ben O'Brien coming to you again. And yeah, we're just going to dive straight into it. So it's probably going to take us around about half an hour. And as always with these sessions, the focus is more on the payroll side of things because there's a lot more that's happening in that part of the world. And so we'll get the accounting side of things out of the way to start with Sybiz Vision, and then get into the more detailed information from a payroll perspective. So thank you all for joining us. And if you've not attended one of these webinars before, we can take some questions through your chat, but please include your email address because we may not get to your question during the session itself, and we'll get back to you later. Also, there is some stuff that we'll be covering that you may ask the question and we'll be addressing it anyway later. So just bear that in mind. And if you are watching the recording, if there is a question you want to ask, by all means, send it through our website contact form, or if it's more sort of technical and consultative, then put that through to your Sybiz business partner. So let's get on into it. And we'll, as I said, start with Sybiz Vision. So this is just a really high level overview. And yeah, essentially for those, if you have just recently upgraded from the classic product, if you're one of the stragglers there, it is a much simpler and easier process to do the end of financial year in the new version of Sybiz Vision. And essentially, it's the same old, same old. You reconcile monthly as you would have in any other accounting system, and you don't necessarily need to complete all of your data entry because it's not a solid end of financial year process. It's still dynamic in terms of you can go back and make adjustments after the fact, but it is good if you are going to be running off your reports to make sure that everything is done and dusted for the financial year before going forward. And yeah, so essentially once you've made your adjustments, etc., you just rerun your reports and do your double checking again and back up your database, and then create a new financial year. So that creation of the new financial year, that can happen at any point in time. You could have done it already, and I'll talk more about that on the next slide. And there is a video clip, and we'll send a copy of these slides, so you'll be able to click the link. That just goes into a bit more detail about some of the reports you may want to run, etc. But it is very much the same process that it has been year after year. There's nothing really to worry about. Over the ditch in New Zealand, there were a few considerations for end of financial year this year, but certainly from an Australian point of view, it is business as usual. So the creation of a new financial year, that is done under the utilities menu of the general ledger. And it is just a very sort of quick process. There's nothing too much that really happens in the background. Like there used to be quite a few things that would happen in the old classic product, but certainly creating a new financial year doesn't do a lot of stuff in the background. It just essentially does what the label says and creates that new financial year. So when you go to actually do that, and again, you can do that at any point in time, but just in the context of the next slide here, what happens with Sybiz Vision is up until we do our version 24 release this year, up until that point in time, there are 3 financial years that you can have open from a transacting point of view. When we release version 24, that will increase to 5 financial years that you can have open from a transaction point of view. So that big warning there saying that users can still process in 2020-21, that just means that the user rights are still permitting, allowing people to process, and just giving you a little bit of a warning to say, hey, you know, if your auditors are a couple of years behind, for example, and you haven't yet put your audit adjustments in, then it might be time to give them a little bit of a boot up the backside to get them to finalise what they need to do from an adjustment point of view. And so yeah, just to clarify, the 3 financial years that allow you to transact within, that has no bearing on the amount of financial years that you can run your reports. So if you've got 15 years worth of data in the system, you can still run your reports from that entire 15-year perspective as well. So it is just the transaction processing that's locked down to 3 years up until version 24 comes out, when that increases to 5 years. And just the editing of the periods as well. As I said, you could create your 2023-24 financial year now if you want to get things like your budgets in for the next year. So you might just want to permit the finance team to be able to do things in the new financial year that hasn't started yet. And so there is that flexibility and options available for you. And by all means, consult with your Sybiz business partner if you want to find out a little bit more about how that all works. And while we've got you, we have just recently released version 23.10 of Sybiz Vision. We didn't have a specific webinar for that version, but just a little bit of a chalk and talk about some of the things that are new within that version. And if you want some more information on any of these, you can just go to the What's New page within the software itself. Essentially, some of the things that have been added, we now allow additional information to be collected in sales transactions. So that's if you do have, say, cash customers, you're not recording their details, you're not setting up a unique customer record for them, but there's, say, an order that's taken that eventually when the goods come in, you'll want to get back in contact with them and say, yep, they're ready to come pick up. There's some greater flexibility there in terms of recording information against the transaction itself without the need of having to create a new customer record. You can now schedule report sets, and that gives you greater distribution control. You can email them, etc. And there's some information in the What's New that talks a bit more about that. A bunch of the reports have been enhanced as well, and we have added a new report in terms of the purchase price variance report that takes an inventory perspective. So we did have a purchase price variance report from a creditor's or supplier's perspective recently released in version 22, I believe that was, and we've just sort of flipped that into an inventory perspective. So that's your standard cost purchase price variance report. For those that are using bank feeds, occasionally there are duplicates that come through. When descriptions change overnight from the bank, they're seen as unique transactions when the bank feed process runs again, and so you can get duplicates. And there's now an option to hide transactions en masse, so you don't have to worry about dealing with them individually. And so that's available in bank feeds. We've got templates in CRM have been rolled out to leads and opportunities as well. From a mobile apps perspective, so there's 6 mobile apps in the stable now. 5 of those are companions to Vision. I should just mention that service isn't quite out yet, but biometrics have been added. So if you're on the iOS devices, you can use your facial recognition, and from an Android perspective, it's the old thumb swipe. And in the purchase app, we have added the requisition approval process as well to that app recently. From a customizations perspective, we've added custom fields on contacts and journal headers, and there's a new breakpoint for sell value change in the cash book. And obviously that's not going to be overly relevant to a lot of people, but those that are doing their own internal development will understand what that one means. And from a wizard's perspective, we had added the next document number to the periodic bills wizard and included some rounding options in the price scale wizard. So they're not new wizards as such, we've just enhanced them. Okay, so that's it as far as the accounting side of things is concerned. Now we'll jump into Sybiz Visipay, and we'll start with the What's New for Visipay. And big one for 23.10 is that the staff type information can now be imported and exported. So where that becomes relevant for end of financial year, or rather the start of the new financial year, and we'll talk a bit more about that a little bit later, is to automate or make life a lot easier with regard to superannuation changes. And as I said, we'll talk about that a little bit later. We have also made some changes for the timesheet import of lump sum pay items. So previously, things like bonuses and commissions weren't seen as different animals under normal STP, but now that we're on STP2, they have been sort of hard-coded to be lump sums, and there's now better support for the timesheet import of those. And again, there's some more information in the What's New for these items as well. We've also added the biometric support for the ESS app, and so that's now consistent across the suite of apps that we have. And from a single touch payroll point of view, we've put some more improvements in place. So previously, if an employee had a reversal, there could be some funky things in terms of it kept on asking you to submit their data when you had already done that. And now we've just made that process more robust. It is also harder to roll without submitting. So there's multiple warnings now if you go to roll a period without having submitted outstanding pay slips through the STP process. And there's also more emphasis on the STP report timing. So what we did see when we transitioned from STP1 to STP2 is that there's still a lot of customers that were basically doing their STP submission whenever they felt like it. So it could be, a week after they processed the pays. So acting outside of that or before payday. So we're just putting more information in your face to say, hang on, you really should be doing this on or before the payday. And it is possible that now that STP2 is well and truly bedded down out there, that the ATO are going to start wrapping people over the knuckles and getting a bit upset with them if they don't do their reporting on time. We've added also a new leave payment type exception report. So what that is now there's different ways of reporting leave or different types of leave payments under STP2. So just a bit of a refresher there. You've got your normal leave, which they've decided to call other, which is not that clever, but and then you've got your leave payouts or cash outs while in service, and then there's the leave payouts upon termination. So you're 3 different categories. So you can configure your pay items to be one or more. You can have your pay items configured to be one of those 3 different types of leave payments. But when you actually go to process, you can choose to change the type. And so if that's the case, then those kind of transactions will be picked up in the leave payment type exception report. So that is an exception by every sense of the word. It's not something that too many people will utilise. And just another recap, we do recommend that you do set up individual leave pay items for those different types of leave payouts and your normal leave as well. In the HRM view, for those with the HRM module, you have the ability to jump straight into editing the employee details. Previously, if you wanted to edit the employee, you'd have to go back to the main view of Visipay and drill into the employee's record. Now, if you're in one of the child records of that employee from an HRM context, you can jump straight in and edit that employee. The leave request email default text, we've improved that. So the various combinations of everything through cancelling leave requests and approving leave requests, etc. They now all read better across the board. And we've also made some improvements to the superannuation alternate file format, or the SuperStream alternate file format file that's used from a super reporting point of view. So that's Visipay 2310. As I said, you can have a look at what's new for more information on that. And just jumping back to the top, the staff type import export, there is a video clip available as well, which is accessible via the What's New page. Just a couple things from the recent federal budget. There is something called Payday Super, which is slated to come out from 2026. Now, at this point in time, we don't really have much information as to what that means, but essentially the aspiration is that Super will be paid at the same time as employees. So that means if you pay your employees weekly, you'll be paying Super weekly as well at the same time. I guess what the government is trying to achieve there is just make it more difficult for employers to not do the right thing by their employees, but in doing so, they're going to be essentially making life more difficult for everyone that's been doing the right thing for years anyway. So a little bit unfair for those that have been doing the right thing, but I guess the problem does need to be addressed with what's been going on out there. So obviously there will be some more detail that will come in the next couple of years, but certainly not much detail at the moment, and nothing we need to worry about at the moment either, but just wanted to cover that off. And then also from a payroll perspective, or potentially a payroll perspective, but we don't think it will be. Again, we're waiting for some more information, but the Medicare levy in certain types of back payments in certain circumstances isn't to be applied to those back payments, and that's something that we'll have more detail on that in around about 12 months' time. But it is something, because of the mechanics behind it, it is something that's likely to be taken care of at the tax return rather than a payroll perspective. But just those were the two things in the budget that possibly had implications for payroll processing. And this old chestnut, we get this question every year, and our answer is generally the same, although as was the case last year, it's a little bit trickier this year. So I'll try to explain this as best I can, but normally our advice is to be on the latest version as at the end of the financial year. And that's just the blanket. So if you don't hear anything to the contrary from us, the default answer is always to be on the latest for the end of financial year. However, this end of financial year, one of the things that we did with Sybiz Visipay 23 was increase the minimum version of Microsoft SQL. It just allows us to, I guess, leverage some of the more modern functionality. So we've increased the minimum version from SQL 2012, which is of course over 10 years old, to SQL 2017. We do recommend that people go to SQL 2022, as that is the latest version at the moment. So it's all confusing with all these 22s and things floating around. But yeah, just from a Sybiz perspective, though, if you haven't been able to upgrade to version 23, then we do recommend that you are on version 22.22 for the end of financial year. There are some things, so just to recap, version 22.20 was the minimum version for STP2, and there are a couple things that were resolved for 22.22 that I'll just verbalise, and that is if you're salary sacrificing allowances, there were some issues there that have been resolved. And also, if you were doing a prior year STP submission, if you were on a version earlier than 22.22, you would also have some issues. So I guess what that means is if you aren't doing salary sacrifice on allowances and you will be doing your STP2 submission prior to rolling into the new year, then you will get away with 22.20, but we do recommend that you go to 22.22 if you haven't done so already. Now, the big exception to that as well is that if you do have Section 57A fringe benefits, and basically you're going to know whether you have them or not, so I won't explain too much about what they are, but I will go into a little bit more detail in a coming slide. You will need to upgrade to 22.23 if you're on an older version of SQL. For those that have upgraded to version 23, you will need to be on 23.10. And again, unless you do have those Section 57A fringe benefits, in which case you will need 23.11. And yeah, just as I said, the minimum SQL version, you do need to be wary of that. So don't just go from version 22 to 23 if you haven't checked what version of SQL you have under the hood. And again, as always, consult with your business partners on that process. So a little bit more about the Section 57A fringe benefits that only affects a fairly small number of employers. So there's certain charities, etc., hospitals, ambulance services, and things like that. So as I said, you'll know if you're in in those categories that can avail themselves of those Section 57A fringe benefits. And I should just clarify as well that normal fringe benefits are okay. It's just these Section 57As. So so if you are on an older version prior to 22.23 or 23.11, it will misbehave by picking up the same amount that's in your normal fringe benefits and popping it into the 57A bucket, which is not what we want. So again, this is only for people with the Section 57A fringe benefits. And we have some superannuation updates as per normal. As I said, if you are on 23.10, you now have the ability to export your staff type information, which is where the superannuation information lives, update it in Excel, and then import it back in. It's a pretty quick and easy process. Obviously, if you've got lots and lots of staff types, that's very convenient. But if you've only got a handful, then it's probably going to be quicker just to manually update them within the software anyway. The reason, again, we don't automate that is that we don't know out there in employer land whether if people want to be paying more than the ESG rate. And it may well be that they've got ahead of the legislated rate, but decided, okay, they'll let it catch up this year. So we don't know if someone, say, had 11% in there already, whether they intend that to go to 11.5% or stay at 11%. So that's why we make it your decision and have you make those decisions about what you want to do with your superannuation rates. And as I said earlier, there is a video clip that you can access via the What's New and also our website to show you that process as well, if you do have 2310. So the process at a very high level, again, from a Visipay perspective is, you should be reconciling monthly, obviously with things like STP reporting. You are reporting throughout the year rather than just at the end of the year, as we used to do with the payment summaries. And just again, very similar to Vision. Run your reports, complete your data entry, make any adjustments, rerun your reports, and do your backup. And then the actual reporting from an STP perspective, we'll talk about that in just a moment, so I'll save that for now. And then what we recommend as far as rolling the year is concerned is, because there might be something that sort of pops up, like an employee might notice something where, say, an allowance has been miscategorized or something like that, and they're only looking at their MyGov records at this time of year. If you leave your current financial year open, it just makes it easier to make any adjustments. And so we recommend that you leave, or you don't roll into the new financial year until just before you do the first pay in that financial year. So you just leave that window open as long as possible in the current financial year. And as always, get assistance from your Sybiz business partner if required. Okay, just on to some STP specific information as well. So the reconciliation process is very similar to your payment summary reconciliation process. Indeed, there is a STP2 reconciliation report, and you can utilize that for the entire financial year. And when we were putting this webinar together, it did kind of surprise me a little bit that it was our transitional year for STP2. It seems like we've been doing STP2 for a long, long time, but everyone using Sybiz Visipay, with a few exceptions, would have had a part of the year up until the start of November of doing STP1 reporting, and then it's been STP2 since then. So the way we approached that transition was essentially by getting people to configure their pay items for STP2 early on. That just allows that continuity of reporting. So there should be no difference in terms of your reporting had you been on STP2 the entire year. Just a little bit of a recap on that as well. Even though we were ready for 1st of July last year, we'd passed all the tests, we'd got approval from the ATO, they asked us to hold back until November. We had always wanted to have a clean financial year for STP2, and that deferral that they imposed upon us, I guess the assurances that we have from the ATO is that even if there are some subtle anomalies in that transition process from STP1 to STP2, they've got the systems and processes to work that out. So that's probably not going to be a big issue from a Sybiz Visipay customer perspective, but there is the potential if perhaps a pay item wasn't configured correctly prior to moving on to STP2, there could be some data that will look a little bit different in this transitional year. But again, the ATO has given us the assurances that they can handle that. So just letting you know that might be a little bit, there might be some curveballs to come up, but we certainly have put the effort in to minimise that. And as I said, the ATO say they can handle that. Just a couple of little bits and pieces as well, that if you do have pay periods that span the end of financial year, they are to be reported in the year in which they're paid. That shouldn't be too much of a mystery anymore, but it was something that back in the old payment summary years, there were people that go, okay, well, we're maybe doing this pay on the 1st of July for the last week in June, so it belongs to June, so we're going to report it in the previous financial year, and they kind of got away with that under the payment summary reporting. That's not the case under STP and indeed STP2. And from a fringe benefits and super contribution point of view, they are handled the same under STP/STP2 as they were under the payment summary process. And yeah, we probably don't need to make that point anymore because we've been on STP2 STP for quite some time now. And as I said, this is the transitional year from STP1 to STP2. Yeah, we just also want to emphasize as well that you do need to report your STP data on or before the date that it's paid. Just a couple other notes as well, that I should just mention that we did have a look at the questions that came through the registration process. So some of these items are addressing those questions that came through the registration process, but the ATO are currently developing a header total editing process. So that's probably not going to mean too much to too many people, because the intention initially with the STP data was that it would be used for pre-fill onto activity statements for the total wages and the total amounts withheld. And yeah, there were some issues surrounding that from a practical sense without the ability to edit those totals, because those totals were actually based on the individual pay events themselves rather than the year-to-date totals, which is what we get at the employee level. So just a heads up that that might be something that we'll have in play this time next year. But for the moment, yeah, there's no real sense relying on that information for your activity statement pre-fill. You still need to sort of run those reports and analysis separately at this point in time. But yeah, certainly when the header editing process comes out, we'll give you some more information. And one of the things that we decided not to take up with STP2 to start with, just because we saw the absolute pain that employers were going through with Services Australia, that seems to have settled down now. Yeah, so that is something that we'll have a revisit of in the not too distant future as well, in terms of the child support reporting. But for those that are having to do child support reporting, that is just following the standard process at the moment, that so not doing it via STP2, but just doing that separate process that you've been doing up until now. Okay, onto the final event indicators. So this is essentially the equivalent of your end of year process. So what we've done is created a specialized event type called the employment income statement. So that's just in your event type drop down. And essentially what that is doing is picking up every employee that you've paid during the financial year and sending an updated bunch of their year-to-date balances to the ATO and letting the ATO know that you've finalised those records. I should just point out, if you've made a bit of a boo-boo and you haven't wanted to finalise them yet, you can go through and do a separate update event, select everyone and turn the final event indicator off and submit it again, and that will unfinalise those records until you fix whatever it is that you want, and then you can come back in and do the employment income statement again. And we do recommend using this option. Technically, you could go through and do just a standard update event and select the employees that you want to submit and turn on the final event indicator, but it's really you know, we've put this process in here to make your life easier, and we suggest that you use this. If you decide to do a normal update event, then you do risk missing certain employees in that process. So that's again why we recommend that you follow the path of least resistance and use this. So you can do this in the current year or the prior year, and just the asterisk there is that if you aren't on version 22.22 or above, you may have some difficulty doing it in the prior year. So just bear that in mind. And it is something that needs to be done before the 14th of July. And the ATO rules are that if you don't do it before the 14th of July, they're going to come knocking and say, hey, you need to do the old payment summaries. So give the, and people are still calling them group certificates, but yeah, that's that old give the payment summaries to the employees and do the PSAR reporting or the EMPTUTE reporting. In our experience, though, if employers have missed those deadlines, the ATO's just said, oh, okay, can you do it now for us through STP? Because I think, yeah, obviously the ATO gets better data through STP. But yeah, just bear that in mind that if you do miss the date in terms of doing the final event indicators, then the ATO will come knocking. All your employees will probably come knocking on your door first, because if you don't do the final event indicator, it makes their life a bit more difficult when they go to do their tax returns to get their tax refunds back. Just from an employee perspective as well, if they haven't gone on to the MyGov to look at their income statements prior to the end of the financial year, they will see something that's a little bit different to previous years, and it may be a little bit disconcerting because of the way the gross amounts are reported. There's a disaggregation of gross, which is a feature of STP2. So this is just a heads up at this point in time that your employees may be seeing this data for the first time under STP2, and they could come and be a little bit confused, saying that you've underpaid them purely because the data is displayed in a different way under STP2. But yeah, you can just reassure them that that's all it is. It's just a different way of displaying the same data, and not to be concerned about that. And just into the final slide now is just once you roll into 2023-24, you need to update your staff types to make some adjustments to superannuation. So for a lot of people, that will just be changing the super rate to 11%. But as I said earlier, you may be an employer that chooses to pay above the legislated rate, but still increase by the same 0.5% that is being legislated this year. So that's up to you. You can make those adjustments yourselves. And if you are having some people that are earning quite a bit of money in a quarter, and you're making use of the maximum super contributions base, so you don't pay above the concessional contributions, then you will update that as well for the new financial year if that's applicable in your case. So as I said, if you're on 2310 or above, you can handle the super changes for the staff types via the export-import process. And just one thing that we get asked quite a bit as well is the tax scales changing, and they are not in terms of your normal sort of PAYG tax scales, but what's now STSL, and previously known as HEX or HELP or SFSS. Those rates are changing. So you will, when you roll into the new financial year, you'll get the message that there are new tax scales available to be applied, or actually I think the message is intelligent enough to where it just says STSL, and they will get applied to your system when you roll the financial year. Yeah, so just a heads up that they will get published by Sybiz in the next few days. And when you go into Visipay, your Visipay will go and fetch those new STSL rates and just put them in a little holding area within the database until you roll into the new financial year. So that's the process that happens there. So with that, just a reminder with the questions, if we haven't had a chance to get to your question, I do apologise, but hopefully you've included your email address in your comments so we can get back to you. And also, if you are watching the recording, as I said, send your questions through the Sybiz web contact form, or if they are specific and more technical, consult with your Sybiz business partner. So with that, I wish you all the very best for the new financial year, and enjoy your weekend. Thank you. Bye.